Because many SMEs, many of us, when we see there's a financier who has come or has put an advert and they're saying we are funding SMEs starting from 5 million to maybe 50 million, they will apply. They will apply because they have seen it's 5 million, but they will not apply because that is what they need. And many times as a financier, you get an application and you ask the business partner, the business person, why do you need 5 million? Or why do you need 10 million? Because I saw that was what was advertised. And you're like, no, we have reviewed, and actually you do not require that because we have a way of reviewing. So I think it's important to first understand what you need the funding for, and then from there you look for a suitable financier who can fit within what you need. There are times that you are, as a financier, you say, this is our minimum ticket size, and maybe a business only required, for example, let's say our minimum ticket size was 5 million and a business only required 2 million. And you say, unfortunately, that's our minimum is 5 million. And many entrepreneurs will tell you, no, it's okay, then I'll take the 5 million. But you don't need that 5 million. So if you demonstrate to a financier that you're not clear on what the funding is that you need and what it's for, then again, you begin to show that you're not very clear in what you're looking for, and that makes you unattractive. That makes you unattractive. So I always encourage business people, look at your business, understand your financing needs, and not your financing needs for the next 2 months, your financing needs for the next minimum 12 months. And based on that, you'll be able to understand this is where my deficit is going to be. In as much as I'm going to sell X number of volume, I will have a deficit of X amount. And this, if I have this, I can survive the next 12 months. But many times we make the mistake of not projecting our funding requirement for an understandably reasonable period, such as the 12 months. And within 2 months, we're then back to maybe our financiers saying, the money you gave me was not enough. Why wasn't it enough? Because we did not clearly understand what our needs are. So I'm just putting it out there that let's take time to really understand what our credit funding is for and how much we need it for at least the next 12 months. It could be 24 months, but for at least the next 12 months. When we plan for a short period of time, that's when we get underfunded. You've had the term of being underfunded because we did not clearly outline what we need it for. Now, many times you also want to understand, we want to understand what your current challenge is in the business. So for example, if you're manufacturing and you do find that you need an additional equipment, for example, you need to bring in a machine. You've also got to justify why you need an additional machine. And so some of the questions we as financiers will ask you is, the current machine, at what capacity is it operating? And these are things that are very critical that you will need to outline as you put in place your business plan or your proposal, or even as you speak to your financier. I need an additional machine. Why do you need an additional machine? Is it because the current one is operating at full capacity and you're still operating for 24 hours? You'll go to a business and they'll tell you, we're at full capacity, we're operating 24 hours. The only time we get to actually stop this machine is maybe on Sundays, and we can only maintain it or do repairs and maintenance during maybe the Christmas period. Then that justifies to you why you need, because if you're operating at over 100% capacity, then there's a need. But there are times entrepreneurs just want an additional machine, yet the current machine is not operating at full capacity. Now, unless maybe the need is going to do something different for you, then I always ask them, why are you asking for this if you really don't need it? Now, secondly, Supposing you do need that additional machine and you have then costed for it. You said, I'm bringing it from China, for example, this is the cost. You need to clearly understand the full cost right from shipping that machine, the insurance that is required, the customs and the duties that you need to pay, so that when you're requesting for funding, you basically articulate all that. Why do I say that? And maybe some of you have gone through that experience. You will apply for funding, you will forget that maybe that machine or that stock required insurance. You will forget that when you bring it into the country at the port of entry, you will need to pay customs and duties. Now, in addition to that, you will need to pay for transportation to your premises. If you do not factor in those costs, what happens is the items get to the port of entry and you don't have the cash to clear. And so what happens? You begin to go back to a financier and say, I need this because I forgot to put this in place. I forgot to put this other cost in place. And what happens? Sometimes as a financier, we don't approve things within 24 hours. There's a due process, and I'm sure you'll agree with that. And I hope you do understand that it does take time to review and go back to a credit committee for approval. So right from the get-go, get your funding requirements correct and understand the clear current challenge that you have. Now, once you've done that, then you find that if you didn't factor in that, you find that if your products or your machinery stays too long at the port, many times if you've not been able to pay your duties, these items get sold by the customs. And I'm sure you've heard of cases where the customs had to auction things that were stuck at the port because people could not come and claim them. And why is it that? Because they didn't have enough money, and they didn't have enough money maybe sometimes when they were applying for financing, they didn't factor that in. So it's important that you understand the purpose and clearly your challenge and articulate how much it is that you need at the time that you're applying. When I talk about also the working capital cycle, it is important that you also understand that as an entrepreneur. And that is something that as financiers will want to understand. Now, the working capital cycle is really how much cash you have at any one time you're able to generate short-term in your business to make sure that your business is operating on a monthly basis. And so what that requires you to understand is how long am I taking to receive cash from my clients in terms of the debtors? How long am I being given by my suppliers or my creditors in terms of credit? And how long am I taking to push my products or my stock that are sitting with me? Once you begin to understand the periods of those three key factors, then it's easy for you to come to financier and say, I need stock. Because as a financier, I will ask you, why do you need stock? And some of you will basically tell me, I need stock now for 3 months. I need stock for 3 months because the stock I have in my premise takes 2 months or a month to get finished, or I turn it over within a month or two. And then also when I'm shipping in my stock, it takes maybe 6 months or 2 months, for example. And because of that, the lead times, you need to understand the lead times. I need to ensure that that cycle of reordering and making sure I have enough stock in my premise is flawless. Because what happens to us many times, we sit in our businesses and we're like, we've run out. We've run out because we've not taken time to really understand the cycle. And sometimes we've run out because also our money is held out there by our clients, our debtors. And so if we're not understanding how long it's taking for substantial funds to come back in based on our efforts of collection and based on when you need to pay your supplier, if you don't understand the gap there, then sometimes you will not critically put how much the critical funds that you're required to apply for. So why am I saying this? Is so that when you understand that and you're explaining to a financier, it's very, very clear. Many times you'll ask an entrepreneur, how much working capital do you need? And they'll say, I need 10 million. I need either an overdraft or I just need a facility that will help me bring in my stock under my working capital. And these are the questions you'll be asked. What is your working capital cycle? How long is it taking you for you to sell, for you to reorder? And how long are you taking to receive your funds from your debtors? And based on that and the expenses that you need to meet on a day-to-day basis, where is your gap? Where is the gap? And that gap will inform you on how much you need. It's a bit technical. I won't go into too much technicalities today, but all I'm just saying that it's important for us to understand our working capital cycles so that we understand the funding gap that we have. And at the same time, if we're purchasing certain items, we need to understand the full cost that is required from point of departure to point of entry. All goods or products are at your premise. The cost, each step that is required, including insurance, because maybe many times your financier will want to make sure that you have insured what it is you're bringing. And as an SME, I know the struggles. You may not have the money for taking on the insurance. You add it onto the funding requirement. Because remember, you can't go back again once a funding has been approved. So please ensure you factor in all that. Another aspect with regards to funding required is also legal costs. Because when you are providing a security to your financier, and I'm sure you all know, a property will probably need to be charged, or a debenture over your machinery will need to be undertaken. And it costs money. So it's important that you also discuss this with your financier, that in addition to that, there will be legal costs for this funding, and they'll probably cost X amount. Can we factor that into the funding amount that is required? So I just like to highlight that, because many times if you're not very clear, in addition to the amount that you're saying, you could become underfunded. And many times also there are entrepreneurs who want to be overfunded, which is actually even more dangerous, because when you're looking for more funding and it's not clear how you're justifying, then you begin to raise red flags as to why you're asking for certain amount of funding that you cannot justify the need for. So just thought I'd highlight that when it comes to the purpose of the credit. So please let's work very consistently in understanding the current challenges within our business and what it is that we need, and whether we need it now or whether we need it in 6 months' time. Because anytime you also take any funding, remember it costs. And so would you rather postpone that cost by another 6 months when you can really justify the need for that? Or is the need required right now? And if you can demonstrate the challenge and the need to any financier, then that gives them more comfort in coming to support you. Okay, the next one then is on how much own contribution that an entrepreneur is bringing, or any business. And I know many times as entrepreneurs, if you've needed funding, maybe a financier will ask you, how much are you putting in? Or if you're to give you this X amount, you need to put in 20%, for example. Now, sometimes the question is, I don't have it, or if I had it, I wouldn't be asking, but sometimes you don't have the full 100%. So I'd just like to encourage you as entrepreneurs, as small business owners, to always ensure that you've got some skin in the game that you can demonstrate to financiers. Many times a business will have maybe been operating for a period of 5 years. An entrepreneur, and as a financier, will want to know, how much have you put in? These are questions that you would ask. How much did you put in? Or I started off with my savings, I had saved X amount of money and I put that in. In addition to that, I sold off a property that was this amount to start off, and this is what I've actually put in over time. And that gives a financier or an investor comfort also with regards to your commitment. There are many entrepreneurs I've funded in the past or discussed with them, let me not say maybe funded, but they came in and sometimes there was just no skin in the game. Have you put in anything? Do you have any savings? How do you have anything? Even when we were funding startups in an organization I work for, no, I don't have anything. I have nothing. I've not saved anything. So you want me to take the full risk, and so my return might be very, very high in that case. So I might as well own the business. So that makes you not very attractive. True? I hope you agree with that. But if you can demonstrate that you have put in a bit and you have shown commitment over the years of how much you have pumped into your business, then it makes it easier for you to actually justify the need for the funding. So I always say to entrepreneurs, whatever little you're making from your business, pump it back. Pump it back because it solidifies your balance sheet, it makes it stronger, and you have a bigger case where you're showing, I have put in this, now I need your help. That's what a financier or an investor wants to see. Even if you've put in a small amount, this is what I've contributed, this is what I've been able to do. But if you just want to take with no contribution, I'm not saying you won't get the funding, but you'll be a harder sell. So there's a commitment that is required from entrepreneurs. And I'd want entrepreneurs to understand that many financiers actually get more comfort when they see that in as much as we might lose as a financier, you are also ready to lose by how much you've contributed. Yeah, so I hope that's clear. Then, in addition to that, there's also the source and the ability to repay the loan or the credit facility. And many times as financiers, we want to understand that. And how do we want to understand that? By looking at your financials and how you're going to generate cash flows if you do get these facilities, and whether you'll actually be able to repay. The source will be from a certain revenue stream or different revenue streams. And so when a financier is conducting due diligence, it's important that you're very clear on your ability to repay. Because if you cannot articulate that, then again, red flags are raised. So how do you make yourself attractive in ensuring that you can demonstrate the source and the ability to pay? It's really understanding your cash flow projections. Why do I say that? Again, it's part of the business plan. You put in your projections, your proposal to the financier. And I can guarantee you many, many small businesses put in projections that are so ambitious, they're so flowery, because they think that the more turnovers you show in terms of your projection, you will qualify for funding. Now, what happens if your projections do not have realistic assumptions? Then again, you begin to raise red flags and you become unattractive. So what happens when you're preparing your projections? Please make sure that they are realistic. Even if you have a consultant who's assisting you, as an entrepreneur who is going to pay for the preparation of this, you have the right to ask, how are we projecting these numbers? There's a time I asked an entrepreneur, how did you come up with this? You're saying you're going to, the following year, you're going to be generating 4 million every month, and you're coming from 1 million every month. How are you going to do that? And they said, I don't know, it's my financial consultant who prepared this. Why didn't you interrogate them? And they're like, there's no way we can do 4 million every month. So please, when you're looking at your cash flow projections and you're preparing them, and if you can't do them on your own, you have someone preparing them. Let them not be prepared for the sake of qualifying for funding, but let them be prepared for the sake of confirming that if you do get the funding that is being provided, you'll be able to generate X number of cash flows going forward, and that revenue against the whatever payments or expenses that you will incur will confirm that you can actually meet the repayments of the credit facility. If it does show that you can't, then maybe you're just not ready for the funding at that time. And so I always say, let's not rush. Let's then take the funding when we're ready. Because if realistically, you know you cannot achieve a certain amount of revenue every month, then you'd rather even request for a lower amount than applying for high amounts that you will not even be able to repay. And the danger is sometimes, I know even us on our end as financiers, there's some things we don't look at because we know that you've provided us with some attractive security. And that's the danger of just funding based on looking at the security that someone is in. But I can tell you, number 7, source and ability to repay your loan and credit facility is so critical, and you must be able to demonstrate that. Because if you can't, the security that you're providing will actually be sold at some point. So you need to be sure that the source and your ability to repay can repay what you're asking for. So ask for what you need and what your revenues or cash flows can afford, and then just take baby steps. Borrow what you need now and what you can repay. And then after another 12 or 24 months, you can then request for more. So remember, security does not pay your monthly repayments. It doesn't pay your loan. So don't provide security for the sake of qualifying against ambitious projections, which you will not meet, which will lead to you not being able to meet your repayments. And in the process, in a couple of years, you lose that asset that you had worked so hard for. Yeah, so moving on to the next point is really about looking at, it's not moving. Okay, is a financier actually wants to see the types of secondary sources of repayment available. And I don't want to talk too much because this is somehow related to number 7, where, like I said, any financier is taking a risk on funding your business. And for that risk, there are financiers who want a secondary exit option. Now, the secondary exit option could be any type of collateral that you have, or at times it could be the assets that are there under your personal guarantee. This gives comfort to the financier, not for qualifying, but in case things don't work out, they have a fallback, because financiers are also in business, and they need to make sure that they are not only making the right funding decisions, but they can get them the money back that they have funded you. But in case things don't work out, what is their fallback? So they want to see that. And so as entrepreneurs, I would also encourage you. Your commitment is also shown by you coming forward and saying, if there's a collateral that is required, here it is. I'm ready to put my collateral on the line, and here it is, take it. I know I'm going to work hard. I'm going to, at that time you're really determined. I'm going to work hard to ensure that it's never sold. When you do have that collateral or whatever secondary sources that you have, and you're reluctant to provide them to any financier, there's always a red flag there. Because if you're really committed as an entrepreneur, and I emphasize the fact of commitment as an entrepreneur, you will also put your skin in the game and say, this is the asset I have. I'm putting it to secure my facility. In case things don't work out, you have this. And therefore, then the financier even begins to feel more comfortable in working with someone who is committed in providing a secondary source of repayment. But the other financiers who may not fund you purely based on collateral, they'll probably be taking an equity stake in your business. Their source of repayment will come from how well the business operates, and so they'll be doing a more thorough due diligence in seeing that you can achieve the value that is expected to give them a good exit or a good return when they're exiting. So if you can also demonstrate that, then a financier will also be encouraged in seeing that your business is going to have this kind of value based on what we're projecting, and you become more attractive then to a financier. The credit history, and I know I highlighted this as one of the challenges. Number one, please make sure that you're banking everything that comes into your business. Do not put it in the drawer and then fail to record. As financiers, we review the bank statements, because when we are validating the turnovers that you have said you have achieved, we validate them even against your bank statements. So again, there's a lot of checking and validating. You've said you've done X amount of turnover for the year. I need to validate that against reviewing your bank statements. So please bank, bank, bank. Bank every check, bank all the cash that is coming. You'd rather than go and withdraw what you need. But bank, because part of the due diligence that any financier will do is they will check, they will cross-reference against certain things. They will cross-reference your credit history in terms of reference letters from other financiers, from the Credit Reference Bureau, and someone talked about that on the questions that were being asked. The Credit Reference Bureau reports will tell us what kind of entrepreneur or borrower you have been. And therefore, unfortunately, if it is not good, then it raises a red flag for any other potential financier. It may not disqualify you fully, but questions will be raised. Now, there have been many instances where, of course, the entrepreneurs who've been put on the Credit Reference Bureaus unfairly, and if you can explain that and justify why it's taken long not to be removed from that, then that is fine. The same way I talked about earlier about even legal cases. There are times an entrepreneur, you'll Google them and you'll see that they had a legal case here. It doesn't mean that it's a deal breaker, but it raises questions. And if they can explain to you what happened, then you can make a decision as a financier that maybe this case was resolved and they showed you what the judgment is, and maybe the judgment was in their favor, and that makes you then review it differently. So I'm not saying it's a deal breaker, but these are things that must be reviewed. So what you need to do is to make sure you're banking everything, your credit history on other facilities that you've taken with other financiers is in good stead, because the minute it shows that you're always issuing RD checks, refer to drawer checks, or you're missing out on your loan obligations, then that means you're going to do the same to the new financier that you're speaking to. And therefore, you're not an attractive potential borrower. So I like to highlight, please make sure your credit history is good. It's a discipline that is required in ensuring that we have good bank statements, not just from the banking, but also even on the checks that we are issuing. I can assure you, if I see more than 3 to 6 RDs in the last 3 months, for me, that's a red flag. And basically, it doesn't matter what security you're bringing. Unless you can explain it, it's not attractive. So please, let's make sure that we are really ensuring that our credit history, if we are making any loan, if we have any loans that we're operating them in line with what the arrangements were with other financiers. If we have bank overdrafts, we're operating them within the limit, approved limits. But if not, that we have a good explanation. And that's why the reference letters from the banks are important. That's why the callbacks are important to other financiers for us to confirm. And if you've got nothing to hide, then you will not stop a potential financial investors from actually doing back checks on your credit history. So it's important that this aspect is taken into consideration, because it does raise red flags, and it could make you not attractive to any financier. The other one is management and staff. So as SMEs, we have, of course, challenges with our cash flows. Sometimes, and actually many times, we're not able to employ the caliber of staff at certain levels because our cash flows may not allow us to pay expensive. But however, there are still good professionals we can employ. And therefore, I'm encouraging you, have staff in place who can perform different technical aspects of your business because you can't do everything. And you need to ensure that you have a contingent plan. If you're not in today, do you have a manager in your business who can stand in for you or you can make certain decisions? Are you able to focus on a certain area in your business and have another partner focusing on this, or staff who are focusing on this area and this other area? Or do you want to do everything until you get overwhelmed? This is critical. We look at this very critically because the management and staff that you have in place can also determine the success of your business and how it's operating. Because if you don't have good staff in place, there'll be many losses, yet you're incurring payroll expenses, which are usually one of the highest for a business incurs, and therefore that makes you more unattractive. In addition, let me just mention that as financiers, we want to look into aspects of even how you treat your staff and the kind of welfare that you're providing them and how you're protecting them. Are you paying them in line with the industry standards, or are you putting them in an environment that is not conducive to work? Those are things that are softer issues, but they're critical. The location of your business, and many of you maybe have been asked about this by potential financiers. This also gives a financier comfort, especially if the location of your business is so important to its success. So for example, if you're in a retail outlet, for example, and maybe a supermarket, and you're in a location that does not have high foot traffic, as a financier, I will not find you attractive because I am not sure that you will generate the sufficient turnovers to be able to actually meet the obligations of my financing. So even as you look for the location of your business, whatever it is in, please ensure that you look at the infrastructure and the suitability. If you're in manufacturing or you have a business where you're bringing in many suppliers, how close are they, or how accessible is it for your suppliers to bring in, or for you to even access your clients or your customers? But is your premise for you doesn't really matter? Then that is not a big thing. But it's important that you look at that, because as a financier, we want to ensure that the location fits in with the whole viability of your business. And then secondly, we also want to see that, is it owner occupied? Of course, if it's owner occupied, you're more attractive because you own the premises. If not, then if you're renting, have you secured yourself with your landlord on the security of tenure? And it's always something we recommend. Do not take a lease that is less than 5 years, because as a business, you don't just want to keep on moving and moving. And even as a financier, we want comfort that you're there for the long haul. So just ensure that even as you negotiate your leases, they're in line with the period of the funding that you're going to take. But critical is the suitability of the location in line with the business that you're conducting. That will give a financier comfort as to whether you're really going to achieve even those numbers that you're talking about. Moving along, the other one is, of course, your products and services, the mix, and the contribution to turnover. It is important that you understand that many of us have a mix. Many of us have different services that we are providing, or different target clients. And so it's important when a financier is asking you that you understand the contribution of each to your turnover, and also the importance, because even sometimes you will find that as you present that, you'll actually realize that the contribution of one line of revenue is actually eating or bleeding into your business, and it's really not worth it. And so as a financier, we really want to understand that, because we may be also able to advise you strategically to drop this revenue line because it's costing you, yet maybe it's only contributing 5% of your turnover, while maybe you have another product and service that is has the potential to give you more turnover, even as you put more focus on it. You could be focusing on a product line or a revenue stream that you're putting so much effort in, but it's contributing a very small percentage to your turnover. It has higher costs, therefore your gross profit margins are lower, and therefore it's costing you. And sometimes you're going to look for financing because of that product line that if you did get rid of, would sort out your problems. So have a look at that, because that is something that also financiers want to see. Be very clear when you're interrogated on your different, for those of you who have different products and services or different types of clients. Some of you have wholesale clients, some of you have retail clients. What is their specific contribution to your turnover, and what is the importance thereof? And the minute you begin to do that and segment that, you'll be able to actually make very important decisions for your business that will actually help you either go for lower financing or not at all. And that way you can focus on the key drivers that will give you the returns that you want for your business. Moving along, the other aspect is looking very much, we want to understand the industry. A financier or investor wants to understand the industry and the market risks that are operating in the business that you're in. So I think it's important for us to be aware as also as SMEs of the industry and the market and the trends that are taking place and the risks thereof. Many times we have come across maybe entrepreneurs who are still operating the way they were operating 10 years ago. And they have not looked at the trends, they've not looked at the risks, they've not looked at the developments happening in their industry or in their market, and they've been left behind. And you find them coming still for funding, while others have moved on and coming to overtake them because now they are struggling. And therefore, they become less attractive. Those who are looking at the risks and adjusting to what is happening in the industry and in their market, you must stay on top of what is happening. You must move with what trends are happening in your business. If you don't do that, you'll become actually even a burden to your financiers. And the reality is you will not be attractive, because as financiers, we also do an industry analysis of whatever business is coming for funding. And if we can see that you've been left, you're still operating how people were operating 20 years ago, then really we can tell what kind of an entrepreneur you are. And so in addition to that, you must then be very clear on what your go-to marketing strategies are and what your marketing plans are. Because if you cannot articulate that to a financier, then you do not give them the comfort. So if you're saying, I need X number of funding because I am now moving into this county and this county and this county, what strategy are you using to go in if you're going to get the money that I'm going to give you? What marketing plan have you put in place? And if the minute you begin to show that that is not even there, it's not clearly demonstrated, it's not been thought through, I can assure you that makes you very unattractive. And so chances of you even getting funding will be very minimal, because it's important, again, that's an aspect of viability, that if you can demonstrate that the strategy you're putting in place to reach the market and to create the demand for your product, if you can demonstrate that and the plan as to how this will be done and it's tangible, then it's more convincing. And also then it ties in to your cash flow projections that you're presenting, because then you can begin to actually confirm that I will be achieving this, because if I go into this and this market, based on this plan, we're hoping to attract this. We have already tested the market. You can even demonstrate that you've tested, and these are the initial numbers that are showing. So tangibilize that, and that then will give any financier comfort. Another aspect is your key customers and suppliers. And it's very important for us as financiers to really understand your terms of trade. It's very important for us to get references on your different customers, your key suppliers, and also to see what kind of contracts. Have you secured any exclusive contracts with some of your suppliers? Is this part of a risk to you in case you lose out to someone else who's coming into the market? So if you can do that, then then you're more secure in terms of securing a contract with maybe a supplier or with some customers. But then the terms of trade are also important. And when I say that, then we want to begin to see what terms of credit you're giving to your customers in line with, and that will be aligned to how quickly then your cash flows are coming through. At the same time, your suppliers will also be able to demonstrate to us whether you're a good credit, whether you're a good payer as well, and that can also inform a financier as to how attractive you'll be. Sorry, I missed the one on competition, but it's important that you understand your competition and what competitive edge you have. And this is also very good for when you do a SWOT analysis, where you look at your strengths, your weaknesses, whatever opportunities are there and what threats there are. And if you can articulate that as well to a financier, then it also gives them comfort. The business financial performance of your business is very critical. And I talked about the challenge of record keeping, bookkeeping. So I'll encourage all of you as entrepreneurs to please ensure that your audited accounts and management accounts are always in place. Make sure that even as your auditors or accountants prepare this, that you understand. And it doesn't mean that we're turning entrepreneurs into accountants. No, you're the business owner. You need to understand some of the basics of your financials and your revenues, and you need to interrogate them. You need to understand the aspects of your balance sheets, your profit and loss statement. Make sure you're looking at your expenses critically to see whether you're managing them well, where you need to cut costs, and even some of the financial ratios. If you don't have any accounting background, get your accountant to take you through to better understand. Look at your cash flow projections, like I said, even if they've been prepared for you, and interrogate them so that you can understand. Because this is an aspect, if the financial viability is not demonstrated, and if you as the owner of your business have not interrogated this, the minute we begin to interrogate you as financiers, hoping to make an investment in you, and you cannot articulate that well, then we get jittery and you become unattractive. Again, I say, even if you have the security, you become unattractive. So please understand that. A key aspect that is also becoming very attractive. Hi.
Hi, I know you're very passionate. We have really gone into
have.
Yes, my dear. Okay. And I know there are so many questions, and I want to be able to make sure we have all the expertise.
Yeah.
So I don't know whether you finished the 18 points.
I think I'll finish the 18 points and then just run through the others like in 2 minutes. Yeah.
And then we do the Q&A. We can do the Q&A. Yeah, sorry to interject. Yeah.
That's fine, but this was the most critical. Yeah. Thanks. So a key aspect that's really becoming critical for financiers to look at is the issue of the environmental and social governance practices in your business. And I've highlighted there that even climate change practices are beginning to take to gain a lot of focus. So how are you addressing these issues? How do you ensure that the environmental practices in your business are properly done? The social are you making sure the health and safety of your workers, there's proper first aid, there's proper governance practices in your business? So please ensure that you're also factoring in this, because many financiers are taking a keen interest in this area. And lastly, on my point on what financiers are looking for, at the end of the day, a financier wants to make sure that they can structure the transaction with you, that there's risk, yes, but there's reward on whoever is taking the risk on you, and that it is accurate and adequate. If a financier is unable to structure some a finance product for you, then at that time, the financial viability has not been demonstrated. And many times then they'll not be able to take a risk on you. But if you can demonstrate all these aspects that I've mentioned, and a financier is able to then structure something, then they can then move ahead and partner with you. So I hope those points have been clear. There are many other aspects, like I told you, but those are the key highlights that I'd like to just mention. And just finishing, as I finish, please make sure that you can look at your ratios, your financial ratios. They're not rocket science, but it's important that you look at especially how your inventory is moving and understanding your working capital, like a cycle, like I mentioned. Get to understand your gross profit margins and why they're fluctuating. And if you want to improve your gross profit margin, look at then how you can begin to reduce your cost of sales or improve your revenue lines to improve on that. A key aspect is also how solvent your business is. And solvency really measures your financial health, a company's financial health, and how you're able to manage your operations. And I'd really like to highlight here that as a businesses, we must make sure that we are not overborrowing, because if we overborrow, then we're not able to meet our obligations. And this is something that financiers will look for. If a financier is seeing that you're too highly borrowed or too highly geared, as we refer to it, then it makes you less attractive because you're tying all your cash in meeting obligations, and therefore it has an effect on the liquidity and your ability to meet your operational expenses. So at the end, as I close, remember, cash is king. We want to see that your business can generate cash. We want to see your cash flow projections, what is coming in, what is going out, and then what is left for the business to operate in. And this then can inform a financier of where your gaps are and what then they can finance you to bridge the gaps, if any. So please, let's make sure that we're managing our cash flows very prudently, especially during these difficult times. So those are just some of the highlights that are also early warning signals that financiers look for. And so be cognizant of those. When we begin to see that expenses are being cut off, or that your receivables and your account payables are delaying and going into periods of over 120 days, we are beginning to see this high capital expenditure, yet there are reduced inventory levels or certain price reductions that were not justified. Or if a financier begins to see diversion of funds, even a decline in morale and sale of even some essential assets, or deterioration of product quality, those are some early warning signs that inform a financier that things could not be going well for you. You could be over trading where you're really trying to sell more than your business can afford to withstand. When you're seeing employees resigning, a lot of changes, your accounts are overdrawing, your loans are in arrears, and there's plant closure or threat of plant closure, then that is a red flag for us. So just to ensure that you remain sustainable, try and get various sources of where you can source financing for your business. There are various in the market, and I know the SME Support Center and Linda's leadership can support you with that. Work with a business consultant who can work with your business and do it not just for money, but from a good present. Be present in your business and aware of all aspects. This is very critical. And also take advantage of organizations that can provide you with technical assistance and capacity building to improve on your efficiency and business processes. Some people mentioned that they would want to improve that in the questions that were asked. Go to organizations that are providing this at very minimal cost or no cost at all. Take advantage, because the minute you begin to improve your processes and systems, I can assure you it will improve even the performance of your business. And again, continue to improve in all aspects of your business. And really, what we always like to remind all entrepreneurs is that the desired result for any financier is to really see a successful entrepreneur, to really see that there's growth and prosperity. We really want to see the job creation for economies and wealth as well. And never, never does any financier or investor want to see your business close. So I hope with that, you will take in those pointers and that you will apply them even as you approach any potential investor or financier, and hopefully you will become more attractive for those of you who are not already attractive, and that you'll be able to get funding for your businesses. Thank you so much for your attention and for giving me the opportunity. Thank you, Linda.
Thank you, Sally. Sally has a wealth of experience, 20 years, yeah? She's invested in so many SMEs in Kenya, Africa, many, many, many. And I know she can give you all the insights. She wrote all those points herself. Sorry, I've had to cut you short a little bit because now I want to get the questions from people. Stephen is asking, good morning. As a building and civil engineering contractor, how can I get funds to expand my business? So he's in building and civil engineering. He's a contractor. What advice would you give him?
Thank you, Stephen, for that question. I would say that, of course, there are various financiers who would be willing to look at contractors and provide them with financing. I know maybe the banks will do, but I think the most important thing that I would say you'd need to demonstrate as a contractor is how the cash flows will be coming through. Because remember, this is not like a trading business. You need to ensure that you really factored in that and the kind of expenses that you'll be incurring. When you're in building and contracting, what you find is that facilities are provided based on the project. So I would advise that you get funding on a project basis, get funding for that project, and then once you paid it off, then you get another project rather, you go for funding for that particular project. So I think for you, it's important you understand the funding needs on a project by project basis, because that's what you need to articulate to any financier, and also how the cash flows will be coming in, because I know they are based on certificates that you raise, and those come periodically. So you just need to find a financier who is willing to take in that and structure repayments for you based on when those inflows are coming in. Yeah.
Thank you, Sally. And I will paste I know a lot of you are asking, where are these financiers? I'll paste the funding opportunities portal. We have a portal where we share a lot of these opportunities at the center. So I'll paste that. And if you want exclusive opportunities, I'll also paste how you register. So Daniel, if you could help me do that. Vivian is asking, what happens to businesses that have not had business since the beginning of COVID? The bank accounts reflect there was no income in 2 years, yeah? Assuming all creditors were paid, what advice would you give such a business? It's not their fault, they don't have revenue for the last 2 years. What advice would you give such a business?
Yeah. I think for me, and it's really understandable, I know many financiers have understood and even other industry players have understood what businesses have gone through, and especially small businesses. And there's also been even relief funding for businesses during this difficult time. I think what I'd advise you is the fact that you can show that there was business 2 years ago, you can demonstrate that from your statements. And I always say it's so important to speak to your financier and be as transparent as possible. And you can show them what has happened. And if things are beginning to pick up and you can demonstrate that, then I'm sure if your financial partner would be willing to listen. The most important aspect is to really be transparent and to show that this is where I was, this is what happened, because everybody understands what everyone is going through now. And if you can see then a light at the end of the tunnel, now things beginning to turn around, and you can demonstrate that you will go back to where you used to be, I'm sure your financier will be willing to listen. But transparency is the key.
I like that, Sally.
Yeah.
And one of the things you said was, if you can also demonstrate the market, you kept insisting on them. There's a point there, how to make yourself attractive. Maybe the last 2 years have not been good, but is there still a market? Can you demonstrate that? So the 18 points Sally was giving are very, very important. Gatweri is asking, hello, Sally, there has been a huge skepticism on financing companies that deal with government, yeah, because of the long periods of payment. My concern is where you can demonstrate that your government actually has been paying you, yeah? You can continue expanding your portfolio. Speak about that. The government contracts, everyone is refusing LPOs from government, from county governments. Is it that people should stop working with government? And where you can demonstrate, can it still work?
Yeah, that's a very good question because I've also been in that situation. It's such a catch-22 because of course government is the largest spender. They'll give you many of the deals, but unfortunately, different counties have different payment structures. And so as a financier, I think what I'd be saying, number one, if you're in business and you do a lot of business with government, the reality is that they do take long to pay. That's the reality. Let's agree that the reality is that they do take too long to pay. So I would advise, and many times we've advised, try and diversify your client base so that you're not fully dependent on government. Number two, if you are dealing with the government, you need to be ensured that the source of monies that are coming from to pay you are guaranteed. So for example, if you have a government project that has been funded, if you're undertaking a government project that has been funded by the World Bank, for example, you know that the money is there, it's secure, you will be paid. So if you can demonstrate that to a financier, then they have more comfort. They have more comfort. Some county governments have really, really put SMEs in difficult situations because yes, their money is coming from government, but they're not prioritizing. And I feel so sad for many SMEs because their cash flows have been affected. So I would say really look at that. And it's such a personal decision that you need to make in terms of diversifying. Who also as a business person do you want to do business with? Do you want to take government projects as well that you know are funded by a good source of repayment? Or do you want to take contracts that you are ready to wait for 8 months to get your money? Remember, as SMEs, our businesses are family lifestyle businesses. We rely on our businesses to pay our rent, our mortgages, our school fees for our children and all. So we want to make sure that whoever we are doing business with is paying us in good time to meet our day-to-day expenses. So one, it's a personal decision, but even as a financier, I look at the risk, and the risk for me will be if I can't get my payments on time, unfortunately, it makes it difficult. So diversify your client base and try and make sure that then you're cushioned by other clients when you're waiting for those other payments.
Wonderful.
Yeah.
I really wish we guys, we are going to extend a little bit today. Please understand, this is how it is, Sally, on Fridays. We run out of time. It's okay, I will get to all your questions. This session is for you. Duncan Odero is asking, what requirements does one need to have before he or she is declared fundable by the donor? I know now you sit on the donor side as well. ACF is almost quasi donor. They give grants and all that. Does the requirements apply for the donors, grants and all that?
Yeah, let me just explain that financing is financing. And these aspects I've highlighted today apply across the board. Sure. Even if you go to Linda today as an individual and say, Linda, I know you have wealth of money. Please, can you lend me? Linda is not just going to say, I like your face, here it is. She's going to ask you very many questions. And some of them I've highlighted that she will want to see, to also give her comfort. But even for us at ACF, even though we do get money from donors, we are funding private sector businesses. And so we want to make sure that the businesses that we are funding are not businesses we'll fund and that will collapse tomorrow. So we also apply the usual funding, the parameters that we look to make sure that a business will be viable, that even if we are doing repairable grants, that they can meet them. And even if we're providing them with grants, that they can actually, that these grants will unlock what the needs that they're looking for and that they'll perform better and be sustainable. So these are questions that we'll also ask. So it applies across the board. They're fundamentals. Financials are financials. We want to see how you're operating because again, like I said, even as a financier, you want to do this for the sustainability of the business that you're partnering with.
Wow. So those 18 points, I know someone has asked me, we look at the last 3. We'll get there. 1 second. Frederick Wambo is asking, yeah, thanks, Sally. Please, can you advise someone who is listed at CRB? There's so many of them, by the way, so many during this time of COVID. But before, the credit record was very nice. Can we have funding, or do we just have to wait until we clear CRB? At least until we are cleared.
Yeah, I know there've been challenges with sometimes getting out of CRB, and that's why you had me saying it's not a deal breaker if you can speak to your potential financier on what the status is, on what's happening. Remember, if you're going to back it up with, if you're saying I'm on CRB and I'm trying to get out, I was probably listed because I defaulted because of the circumstances that have been there in the last 2 years, but I have probably straightened my record and I'm trying to get out and it's taking long, maybe because of certain bureaucracies. Bring the statements to the financier, let them look at them. Let's see what you're really saying to demonstrate that you should be out of CRB, isn't it? So if you're back on track, then there's no reason that a financier won't take a risk on you, even if you're still listed. But like I said, the fact that you're there, then of course will elicit more questions. And therefore it's for you to then demonstrate or justify why then that should not be a deal breaker. I hope Wonderful. That's clear. Yeah.
That's very clear. Yeah. Maureen Owade is asking, wonderful presentation. A quick one. What happens to a business that has bad credit status due to poor funds management, but has gone through training and capacity building and realizes where they went wrong and are ready to rectify to succeed, and clear off the debt? So they're in that track of clearing off the debt. Can funders listen to such people?
Like I say, all is not lost. We make mistakes as business people. There are times we overborrow, there are times we overtrade, there are times we have bad credit history. So my advice is sort it out, turn around, give it a period of at least 12 months, and then go back and say, look, I've sorted my life out. No longer, in bad state. I've cleared, I've learned from my mistakes, and a financier will listen to you. But you just need to work fast on correcting it. So I would always say, give it 12 months to 24 months. Then I'd be convinced that you have really turned around.
Wow.
Yeah.
Wow.
Yeah.
So it's about showing the steps and the traction that you're starting to improve, and your cash flow is starting to improve, your bank statements are starting to improve. And yes. There's a lot of questions around that. Even Edna Simiti is asking, what if an entrepreneur's investment went bad? It was banned or something. I made an investment in the company, then when COVID hit, I'm back to square one, since all the plans have been altered and the investment went down the drain like that. How can an investor, financier view that? It's what you're saying. Maybe comment on that again.
Yeah, I think again, of course, sorry about that. And I know many businesses have suffered during this time. One, again, is to demonstrate what caused the collapse. Was it, that, did you sometimes, and the thing is, like, again, transparency, what caused the business to collapse during this period? Was it that there were no customers to buy, or did you have contracts canceled? People also lost jobs and contracts, and therefore they could not operate. So what caused that? That's number one. Number two, as you begin to maybe turn around your business, what are you doing to demonstrate that now it will be viable? And that's what you need to demonstrate to an investor. This is what happened. This went down. And the thing is that I say, SMEs or business people are so resilient. You're able to pick up again and move on. How did you start that business? If you can demonstrate, I can start it and I've learned from my mistakes, and this is what now I have put in place. This is how I'm going to go. And actually, this is the demand is still there for my products and services. Then you can give comfort. And again, look at all those points. Look at your business plan. What comfort, how tangible is it that you're giving comfort to a potential financier that indeed I'm back on my feet and now I just need your support? Again, with the transparency, this is what went wrong. Because let me tell you, many times if you have diverted funds and made that mistake, a financier will know. We just need to ask a few questions and we'll know how you diverted the funds.
Mm-hmm.
Yeah. And if it's a question of diversion, then it's a question of, you know, a big mistake that was made. And if you've learned from it, then maybe we can pick up from there. But again, it's usually such a red flag. Yeah. Yeah.
And then many questions from startups. Yeah.
Yeah.
People who are starting up 6 months and all. Speak about startups and sole proprietorships. People who are 6 months old. Yeah, who have put in some, you talked about skin in the game. Maybe they've put in 500K, 200K, 300K, and they're looking for funding. Is there a hope?
Sorry, what did you say, Linda?
Is there a hope for them, for those startups looking for funding? Yeah,
Definitely.
they put 6 months old, they put in only maybe 500K Kenya shillings, which is $5,000. Is there a hope? How can they get funding?
One, of course, I'll say definitely there's hope, and kudos to you for starting up and remaining resilient during these difficult times. What I would say is, one, take baby steps. Baby steps. Learn as you grow your business. If it's a startup, if it's 6 months, learn. Pump the money back. Whatever you're making, put back into the business. Make sure, like we said, that you're banking everything in your statements, because as you start approaching any financer, they want to see how much you're putting into through your bank statements. Put in everything and make sure that you take advantage of anybody who can help you to capacitate yourself. For example, the SME Support Center. Go visit them and see how they can help you with any technical assistance or capacity building that will help you as you start this journey. Startups, I can tell you, need a lot of assistance. So don't feel like you are know-it-all. Get as much assistance as you can and bootstrap. Bootstrap as you start off as a startup. Bootstrapping means don't incur high expenses. Don't incur high expenses. Don't start looking for a big go down where you're only occupying 1/8 of the go down and paying rent. You know, that's so substantial. Grow slowly and watch your costs. That's Wonderful. What I'd say. Take baby steps and pump back so that all those aspects I mentioned, as you begin to approach finances from financing, they will be looking at that.
Wonderful, wonderful. And yes, feel free to register at the center. We have opportunities for those of you who are at least 6 months and above. Some funders, private funders who can give short-term financing up to 1 million bob. Just register at the center. We have those opportunities. Speak about sole proprietorships and people who only have M-Pesa, Lipa na M-Pesa, which is not connected to the bank accounts. Yeah, so some people only have Lipa na M-Pesa, the till numbers, and it's not connected to the bank account. Do funders look at Lipa na M-Pesa?
Okay, so sorry, the first question was on
sole proprietorships.
Okay, so sole proprietorships are basically, of course, businesses that are owned by one person, but it doesn't mean that they get disqualified. As long as you're formally registered business, you'll find potential financiers who are willing to look at you. Like any other business, you will, of course, be preparing your audited accounts as well. So don't think that if you're a sole proprietor, you're excluded. You need to ensure that you're operating professionally and preparing audited accounts. I think the only downside to being a sole proprietor is that the business is so dependent on you, and if there was any litigation brought against the business, you would be enjoined in it because it's you. So that's why you're advised as an entrepreneur to register a separate entity that is separate from you as a person. And that way, then you have a limited liability, because even as a sole proprietor, you'll still be paying tax. But I think to separate the two entities, you're always encouraged to register as a limited company liability. And I think even in Kenya nowadays, you can be the sole shareholder. You don't have to have, previously you had to have like a minimum of 2 shareholders, but it's in terms of separating the entity. With regards to the question on M-Pesa, I think nowadays M-Pesa, Lipa na M-Pesa does have, you can get statements from on your Lipa M-Pesa account, and that can also show what is coming in. And so financiers can look at that because, of course, it's money that's coming into the business. But you do know that there's a way of transferring your M-Pesa money into your bank. So if you want to demonstrate that turnover, don't eat from the M-Pesa account. Transfer all that money into your bank account. There's a way you can transfer. But I think, of course, the statement from the Lipa M-Pesa account will show, but remember, it's not a bank statement. It will help with validation, but good practice is transfer whatever is coming to your Lipa and M-Pesa account into your bank.
Your bank account.
Transfer it into your personal account.
Amazing.
Yeah.
Guys, why it's so easy. It's so easy to transfer. So please, it also allows you to have a relationship manager at the bank, and you can start having conversations on funding as well. Thank you. Thank you. Guys, let's be formal. Let's be formal. Eunice is asking a very important question, yeah? Kindly talk about consolidation of various financial obligations. That is loans from different financiers. I'm overwhelmed with the many financiers and I only want to deal with one. Talk about consolidation. Are there people willing to get loans from other banks and consolidate? I don't know.
I'm not so sure what she means in terms of what consolidation. Is it that there are too many financiers? I was not so sure.
So she has many loans with different financial institutions. So she only wants to deal with one. So I guess if, let's say some people have a loan with the KCB, SBM, then you maybe have another private one. Then maybe you have the mobile money. Okay, so I think she's asking for the formal ones, for the banks. Is there a funder who can consolidate all the loans into one?
Yeah, I'm sure there are, and I'm sure, I guess you have the advantage that you're now taking loans with many banks. You can speak to and see who is the most accommodating or, fitting in line with your business. And so I would say that, especially if you're a small business, do not be so overbanked. It's also not a good sign. Do not be so overbanked. You're not a large blue chip listed on the stock exchange. So consolidate your banking. Look at who is giving you. It's a personal decision. Who is giving you the best service, and stick with that bank. At the most, maybe 2 banks, maybe because of the branch network or whatever service you'll be looking for. But having said that, if you're with too many banks and too overborrowed, that for me is also a question I'd be asking you. Why are you borrowing from this bank A, B, C, D, E? Yeah, is it that your core bank A could not provide you with additional funding because of a certain reason, and then you moved to bank B? Then when bank B could not come through, you went and took another loan with bank C, and then maybe, as we talk about what I'd raised earlier, are you heavily borrowed? And that way your monthly obligations are so high that you cannot meet your operating expenses for your business. And then soon you'll go to bank F and take another loan because you're so stretched. That is a very dangerous position to be in. So I would ask, not only should you consolidate your banks, but you need to consolidate your banking, your loans, and make sure you're not over borrowing. Because that's a dangerous spot to be in. Yeah.
Wow, amazing. You spoke about co-investment. Duku Mutua is asking, is finance the only skin in the game? How much money I've put in? What about time and effort that I have put in so far?
Yeah, that's a good one. And it depends, I think, on the financiers. Like I said, there are many financiers in the market now who are looking for different things. And I know Linda and her team can advise you on those who are able to see, because they've got a whole database on those who say, your skin in the game could be your time, how much but sometimes how do you quantify that? Maybe there's a financier who's willing to just look at that, a more riskier financier, but more risk, what would I say? A financier with higher risk appetite who just will see how much have you put in, and they're willing then to take a risk on you. But I would actually just say, if especially you are already trading, the only way you can demonstrate how much you put in the game is by pumping back whatever you make. I can tell you, you'll never go wrong with that. If you're making and you're eating, then that's not, your balance sheet will show. And our finance will be able to see how much you're pumping back, either through what you're making or either through your own shareholders' funds, from your saving, and sometimes actually as SMEs, we get money from, you'll get money from friends and family. And that in your balance sheet will show as either directors' funds or shareholders' funds. It won't show money from my auntie, money from whatever. These are people who believe in you, and you've seen most businesses start that way, money from friends and family. And that money shows that you have actually been entrusted by others and who have given you money to put in. So that's your own contribution. And then as you kick off and whatever little you're making, please pump it back, put it back in the business. And that is a demonstration of your own contribution. Yeah.
Amazing. Ultimately, we're in business to make money. Guys, ultimately, you must show in your bank account. Amazing. Emma is saying a comment she's made, Emma Wanjiro. My biggest take is that an entrepreneur could be thinking that funding is their biggest problem, but it could turn out to be cash management and their business structure. What you are saying, Sally. And I think with that, I may want to end the Q&A from here. I don't know. There was Martin. Martin was asking about KEPSA. What is KEPSA doing? Some of you have attended trainings. What is KEPSA doing for those who attended training? Can they get loans? KEPSA actually had a good interest-free loan. I don't know how you missed it. It was very good. I don't know, it might come back. So watch this space. And some of you who've been attending trainings have actually been put in the access to finance coaching program. And so you will get a lot of help. Today's session, I forgot to mention, please tweet about it. I really forgot to mention that. We have a hashtag, KEPSA empowers MSMEs. So please tweet about it, please tweet the lessons, get as many people to come. I've been told there's an interesting question from Frederick at 11. I can't seem to find it at all. I can't seem to find it. Let me find that interesting question that everyone is telling me about. There's so much chat. One second.
I think, Linda, as you find it, I think there's that question about, Linda, maybe as you find it, there was that question about the biggest problem not being financed. And we've actually encountered many businesses where when we ask you for your debtors list as you're approaching us for funding, we can actually see that many times you just have money out there with debtors, with your clients. And so we have advised entrepreneurs in the past, even in my other places I've worked, that actually you don't need to come for an expensive loan. Just go and knock at the doors of those entrepreneurs and collect your money. Your problem will be sorted.
Wow.
Just collect. Have an efficient collection system in your business that makes sure your money is not out there, because you could be saying, I'm selling so well. You're selling, but there's no cash in the business. I've said cash is king. So have efficient collection systems before you start going to borrow and borrowing expensive money. Yeah.
And I also liked what you really said. I found it very profound. Just because you have collateral doesn't mean you should go borrowing money. Do you really need the money, right? So maybe it's the collections like Sally's saying and all that. Very important. Frederick, I found Frederick's question and it's very important. Sorry, I missed it. Why is it that most funding nowadays is done to the youth, people below 35 and women, but male over 35 years are not considered? Yeah, donors have this requirement, everyone, yeah? Is it that they're more risky or they're not mature enough to get funding? Please reply. This is the boy child.
Oh my, the boy child.
Yeah.
Let me first emphasize that it's not just funding that's going to the youth and the women. There's still funding for men. The only problem or the challenge is that the women and the youth have been left out for a long time. They've been left out for a long time, and they have, for lack of a better word, somehow been marginalized, okay,
Sure.
when it comes to funding. And so what you find is that, yes, where you're beginning to see people saying, we want the women and the youth to come for funding is because, number one, there's a lot of unemployment. So there are no jobs for the youth. And so there's a lot of entrepreneurship being encouraged for the youth to take up. Youth have been told, take up entrepreneurship, develop good businesses, and we will fund you for the businesses that you're setting up. Women have unfortunately been marginalized also for a long time, because many times they don't have the collateral, they don't have certain things, the men are the ones making the decision on the home. So this has been recognized. So it's not that the boy child or the men have been left behind, it's that there is some sort of strong focus now trying to attract the youth and women to also come up and say, hey, we know you've been left out, but come, there's something packaged for you now, even as we continue to fund the men. So now everyone is being catered for.
Well, yeah, there's a lot of that. I know, I feel it sometimes. The people we can't admit to programs because of 35 years and above. The men are really feeling it now. We understand.
Yeah.
Thank you. Everyone has.
Yeah.
Sorry,
it's
you were
to
saying
encourage
something?
the youth to also go into entrepreneurship, right? Yeah.
Sure. Wonderful.
Yeah.
Yeah, I think I have pretty much covered everyone's questions. Great. Even if we started the Q&A later, I think I've pretty much covered the startups, everyone. So if you want, I think I've covered everyone. Yeah. All your questions have been answered. Yeah. So if you want a polite reminder, a few polite reminders. Maybe Sally, you can give a parting shot, then I can go over now to the admin side. Parting shot to the participants. I see we are still 2:35. Some had to leave. Sorry, we are over time today, but yeah.
So my parting shot is, I would urge anyone out there who's in business to really keep going. Remember, it's take baby steps. Cash is king. And just do the right thing. I've highlighted the points, and definitely you will be attracted to financial, and your business will grow. Just do the right thing, and remember, cash is king.
Wonderful. Thank you. Yeah. All those 18 steps. Wow. Yeah. I wish we had more time. They were really profound. All those 18 things. Yeah. They're really good. Yeah. So guys, say thank you to Sally. She's very busy. She's invested in many companies. In fact, I knew it was so hard for her to get her here. Say thank you to her.
It was my pleasure. It was a pleasure. Yeah.
Thank you, Sally. So at this point, guys, if you want to speak to your peers about how business has been challenging, your tips, whichever sector, in the next session, please chat my colleague called Daniel on the chat. Tell them I want to be a speaker. You will prepare a presentation as well, and etc. So chat Daniel, and remember you can tweet KEPSA empowers SMEs. Please tweet, yeah. Please tweet KEPSA, and any takeaways, you can tag SME Support Center, you can tag KEPSA, you can tag our speaker as well. So please tweet about that. So many appreciation points for you, Sally. So many people are very appreciated. So many comments. We don't share presentations. There'll be a YouTube on this. We don't share presentations. So at this point, let's run the post training surveys. Please hang on. 226 people. We were sold out today. We are live on YouTube. We were sold out. Please, let's run the post mentorship and then we finish. Poleni Sana, we've extended the time today. Leod, over to you.
Thank you very much, Linda. We'll run through this as easily as we did with the other one and as we've always done. So if you had not joined us as we began earlier, just pick out your mobile phone. What you will do is that you'll just visit www.menti.com, as you can see displayed on the screen. Then you're going to type in the code 41618115 to access. Once you're there, there will be a love heart on your screen. Just hit on that, then you're able to see that you're actually online with us. So you quickly, do not drop off. This is also very important. This is an important part of this session. www.menti.com. Then you key in the code 41618115. I know some of you already have the app, so you have moved straight into that. So I'm just going to go straight to the question. And here's the first question. I see 6 of us already are there. So let's take the first question. The first question says, how satisfied were you with the overall training? I see the overall training content, sorry. I see 9 of us have already given us their input, and most of you indicate that you are satisfied with the content. I see 15 of us. I know we could get to 30, so please, let's get a few more people poll in. We have 19, just a few more. Let's get to 30, please. I see we are 20 now. Most of you indicating that you're very satisfied with the content, with the training content. We are at 21. So if you just joined in, you'll be required to key in a code which appears on your screen. Just key in that code and you're able to follow through this polling session, and you do that on menti.com. Alternatively, you can download the app. So we are 26, 27 now. We can now take the next question. How relevant and helpful do you think this was for your business? So what you do is you just again, like you did on the other question, you just slide there's a slide on your screen, just slide it to the right up to where you're comfortable. And yeah, I see we are 21 now, 23. I'm confident that this time we'll get to 30. All right, there we go. We are going on 26. All right, excellent. We are 29, just one more and we hit 30. Okay, there we go. So which sessions did you find most relevant? Let's see. Oops, sorry. Okay, so we'll take the next question here. Evaluate the following statements based on your experience in the training. The training was informative. The training met your expectations. The training helped you understand the concepts better. The training was well prepared. The facilitator contributed to the success of the training. There was enough time to cover the topics. And were you engaged throughout the session? Let's see, just slide them through and I see a lot of us here saying that the training was well prepared. I also agree with that statement. See a lot of us here saying that it was very, very informative at 9.6. It keeps moving very, very fast here. I see a lot of you agreeing with a lot of these statements. I don't know what's happening to the topics. Let's see that going. Okay, it's also improving. We are 28 now. We just need 2 more and we get to 30. And a lot of you saying that the training helped you understand the concepts better. We are 32 now, so we can take the next question now, actually 34. Thank you very much. So what learnings from this training will you apply? What learnings will you apply? I know the questions were so many. You could see the questions. And one of them that you asked is what KEPSA is doing to support your business. We do have a lot of programs that we keep thinking about, that we keep starting and implementing. So be on the lookout. We'll be communicating in this forum as we begin other programs, and so that you can benefit. So we'll be letting you know what is coming up soon in this and other forums. And also you can follow us on social media just to keep getting information on what KEPSA is doing to support your business. All right, I see someone says KEPSA support programs. Someone says bank all your returns. Someone says here technology, entrepreneurial skills. Someone says commitment, working capital, they say. Bank all your returns. Okay, all right, they're coming in thick and fast. We do have 19 of us who've polled. We can get just 10 more, and then we are just almost getting to the end of this poll. Thank you very much. We are 20. Someone says here cash is king. I like that as well. Someone says about working your business plan and having a solid business plan. I know that came out strongly. Okay, we are 32 now. Let's take the next question. Is there any specific feedback on this training content that would have covered in order to fully meet your expectations? Something that you feel you would have covered to fully meet your expectations on this specific topic that was left out? Just write it down. If there is none, you could just write NA. All right, we'll take this section very fast. We're almost there. Let's see. Okay, technology and innovation. Names of funders. I think I had Linda mentioned clearly that if you'd like to receive this information, I know the SME Support Center does have some of that information, and you can get it from her. Get more time to cover all topics. Okay, someone says that they need more time. That appears twice. Then someone else says that they are satisfied funding opportunities for non-profits. Okay. Excellent. We are 21 now. So let's take the next question. Here it comes. So how satisfied were you with the training logistics? So we've used several platforms and tools during this session. Please give us your feedback just to see how the tools worked out for you. So the Zoom platform used, I see one person has already given their feedback. Okay, excellent. Moving very, very fast here. We have 13 people. Here we can get to 20 at least. All right, we are 21. I do not think there's any other question left. And in that case, I hand it back to you, Linda. Thank you.
Thanks, Leod. I know we are overrun. So guys, if you want to participate in the peer-to-peer next week, chat Daniel, he's on the chat. Also register for the next session. It's about you guys. The next session is peers, people in the audience mentoring others, right? So we'll pick about 5 of you. You will have to prepare presentations. We'll take you through a dry run, and you'll speak about your journey, peer to peer. Let's encourage each other. It's going to be fun. It's going to be exciting, and we're going to pick 5 of you in the call. So chat Daniel. Daniel, if you can put the next session, and you can also put, Daniel has also put himself there. For anyone who wants to mentor, please direct messaging him. I will give you a chance. I'll give you 2 minutes to do that. Register for the next session is on the chat as well. It's a peer-to-peer mentorship. We are mentoring each other. If you want to do it, let me know. Last time we had DJ Mejan, we've had Saum Siraj, we've had very many of you. Yeah, you guys we've had Gatweri, Githinji, we've had many of you come and mentor us about your business, what you should do. Basically, we want to see, have you learned from all the mentors we have brought here? So please do that. In the meantime, you can actually chat on Twitter, what you've learned, the lessons, hashtag KEPSA empowers MSMEs. Yeah, so please, Rai, Mudhoni, you'd like to mentor? Yeah, sure. Please chat Daniel in there. Chat Daniel. Chat him on the direct message. We'll reach out to you. We'll reach out to you. Yeah, Daniel, you can pick Rai Mudhoni. If you want to put it on the chat, it's okay also. So Daniel can also pick you guys in here. Yeah. So Rai Mudhoni, is that Rahab? Rahab, Yummy Delight, is that you? If that's you, yes, you will mentor. Yeah, you're a very committed learner, very committed, very committed. So if you want to mentor, put yourself on chat. We'll reach out to you. Eunice Maina, wonderful, wonderful. The boy child, please make sure you also, the ones who are over 35, those guys, please make sure you put yourself in there. We want you to mentor. Yeah, yeah, wonderful, wonderful. You can put it to everyone. We shall pick the best 5. Yeah, Sally says, thank you. It's been a pleasure. Thank you, Sally. We appreciate you. We appreciate. I see still 160 participants. We appreciate. Rosa Mango would like to mentor. Grace Wakesho. So Daniel, I hope you're noting them down. We shall pick the best 5. Yeah, John, boy child, if you want to mentor, please put yourself in there. You'll have to prepare a presentation about your business and we have a conversation. So it's a good opportunity. We are giving a good opportunity. Thank you. Thanks, Sally. Thank you, Sally. Thank you for your time. Best wishes to you too. Guys, register for the next session and we shall end this. We're ending this in 2 minutes. Just register for the next session. And if you want to mentor Daniel, put your name on the chat. If you want to mentor, put your name on the chat. I'm just giving 1 minute for this. Team, I'm just giving 1 minute for this. We've completely overrun today. 1 minute for this. Felicitas, great to see you. Great to see you. Just 1 minute. Register for the next session and Daniel will note down those who want to mentor. Yeah, register for the next session. Yeah, register. I wish you had more time today. Register for the next session. Vivian Nadala, you'd like to mentor? Yeah, I really enjoyed your question. Yeah. Daniel is noting all your names. We shall get your contacts from KEPSA. and we shall contact the best 5. The best 5. Yeah, it's not a guarantee. Yeah, wonderful. Frederic, thank you. I was waiting for you to volunteer. Yeah, because you asked that question. Yeah, so please, you must be already in business. You'll prepare a presentation about the things you have learned. Yeah, so great to see you, Frederic. Yeah, it's an opportunity for you guys. Great to see you. Okay, guys, as you register for the next session, can I find that? So if you want to see funding opportunities, we post them every week. We've put the link there at the SME Support Center. You can also call us if you want to see, to get exclusive funding opportunities. For those who are 6 months old, just register and be part of our great mission. Just register. Once you register, we send these opportunities to you. Yeah, we know how to do it. We match you, we send. We have a huge team that does this. So just register and we shall support you. If you want exclusive funders, just register and we'll support you. If you, KEPSA also has amazing goodies. Go to www.smekepsa.or.ke. You get a lot of goodies, Sorry, guys, it's our time to leave today. Great to see you. I don't know who this is connecting to audio. Great to see you.